Now we proceed to our transaction on January 16. So on January 16, the company rendered services for cash of 22,000. So of course, when we say of rendering services, so there is clearly income earned. So of course, again, rendered service means there is income earned. So obviously there is recognition of service income. And the second part of the transaction is pretty much obvious. For cash, meaning the company received cash. So therefore, the other account that is affected is clearly cash. So cash is received here, and of course cash, as we know, is an asset account. And service income, again I reiterate, is recognized because the service is already rendered. So that is the point of recognition of income. Once the income generating activity is already completed, so there is already completion of the point of revenue, and therefore service income must be recognized. So the two accounts affected are again cash and service income. Therefore, this transaction is an accountable event. So what happened here? Of course, the cash, because it is received, is increased by the amount, and that is 22,000. While service income also increased because prior to this transaction there was no income recognized. But now that the service was already rendered, obviously we have to recognize the income. Therefore, service income increased from 0 to 22,000 also. And remember, service income is part of owner's equity, but unlike expense, the effect of the income is the same as that of equity, meaning as the income increases, owner's equity also increases. It is not the same with expense, where expense has the opposite effect. So obviously, if we present it in a table, we have assets increase by 22 because of the cash received. Liabilities is not affected, and as I have said, owner's equity is also increased because now we have income which increased. It is not like expense in the previous transactions. So as income increases by 22,000, owner's equity also increases by the same amount. So that is the effect of the transaction. If we have to present it in an expanded format, we have here the assets 22 increase by cash, and the income 22,000 also increased. Service income is the account title used. And as to overall owner's equity, again, this 22,000 increase in income is also an increase in owner's equity by the same amount of 22,000 as we have here. So now we go to our transaction analysis, applying the rules on normal balances. Again, cash being increased should be debited, and service income, which is an income account, to increase that, it should be credited. So for journal entry, we simply have to summarize that analysis. Cash therefore should be debited, and service income should be credited. And therefore, if we convert that into an entry, it would look like this. Okay, cash on the debit and service income on the credit. Amounts are both 22,000, and the explanation can be as simple as service rendered for cash. Okay, so that is our journal entry for transaction on January